What's going on, guys? If you're new to the channel, welcome. My name is Nick, and today I'll be sharing with you my entire $33,000 stock market investing portfolio. In this video, I'll be pulling aside the curtain and actually logging into my brokerage account to show you guys exactly how much my portfolio is worth, how much my capital gains have been, what all of my positions are and their cost bases, along with why I bought them in the first place. And to be honest, I'm doing this to be completely transparent with you guys, to help you understand my investment philosophy and my strategy, along with how I make my investment decisions. I just want to make it clear that I'm not trying to do this to show off or brag in any way. I truly just want to provide you guys with some value. Now, before I began investing, these would be my favorite videos to watch on YouTube, where people would completely reveal their portfolio values and all of their positions, because it was simply so motivating and inspiring to see others achieving financial freedom, and it really gave me that boost to start investing. But also, I found these videos incredibly informative because it would show exactly how people would pick their stocks and make their investing decisions. Because as a beginner to investing, I found it extremely difficult to find a good mentor that would actually teach me about the right types of investments to choose, to simplify concepts, and then also just being on the overall same wavelength as me as a long-term investor. I truly hope that taking a deep dive into my 5-figure stock market investing portfolio is both inspiring and informative for you guys. And if you do enjoy this video, be sure to drop a like on it, because it did take me a long time to do this and put out the effort for you guys. Also, if you're new to my channel and you haven't subscribed yet, definitely consider hitting that subscribe button down below, along with the bell icon, to get updates whenever I make investing videos just like this. Now, before I jump into my portfolio, I quickly want to talk about my investment strategy and my philosophy behind investing, so that when I do reveal my portfolio, everything's going to make complete sense to you guys. One of the things that you guys need to know is that I'm a long-term investor, so that means I'm going to be holding my stocks for at least years at a time, if not my entire lifetime. I'm not one to trade with penny stocks or even bet on Bitcoin for that matter. I'm actually a very conservative investor, and that means I like to buy blue chip companies and very big companies that I know are going to be around for the long term. And what this means is that my returns might not be sky high, as if I bought into Bitcoin at $10 before it went all the way to $25,000 per coin. None of that, but my returns will still be good, and more importantly, they'll be consistent over the long term. I personally think it's very important for an investor to have clear goals, and one of mine is to actually develop a stock market portfolio that can sustain my lifestyle and allow me to achieve financial freedom in the future. And all this means is that I want the portfolio to generate me passive income to be able to cover all of my expenses in my lifestyle. And for this reason, a huge part of my portfolio returns that you're going to notice is actually from dividend-paying stocks, and these dividends will eventually be able to cover my lifestyle expenses as they grow over time. This is honestly the truest form of passive income, because I don't have to put in any work at all to be able to receive this. Literally, I just buy the companies and they'll pay out dividends on a quarterly basis. So overall, whenever I pick my companies, I like to have that cash flow focus in my mind, thinking, will this company be able to generate me cash flow long into the future? Now, in addition to dividends, of course, I take advantage of capital gains too, and I achieve that through value investing. I just made a video on how to analyze a stock, and in that one, I talk about value investing. So if you haven't seen it, definitely check it out. But essentially, it involves buying great businesses at a discounted price. I'm often very patient and mindful when it comes to buying my investments. Like, I'm not just going to go out there and buy a company because I like it. It has to be at an appropriate price, and I usually take advantage of good opportunities when they go on sale. And what you'll find is that a lot of my investments were purchased at a very low price, and I achieved this through all of my value investing techniques that I talked about in the last video. So anyways, with that said, you should understand where I'm coming from now in terms of my investing goals, and that means we can jump right into the portfolio. Alright, so here I am on the main Questrade homepage, and for those of you who are interested, I have a self-directed TFSA investing account, which is a tax-free savings account here in Canada. And as you can see, it is one of their most popular account types, since it is a government-sponsored account that gives you completely tax-free gains as long as you're putting in after-tax money. But the only catch is that there's an annual contribution limit of about $6,000 per year. So that means you can't put your entire life savings into this account and hope to never pay tax to the government. But anyways, let's scroll up here and log into my personal self-directed TFSA here on Questrade. and I'll be blurring out some of my personal information for obvious reasons. And here we are on the summary page of my stock investment account. So as you can see, my entire portfolio equity value is just over 33,400 Canadian dollars. And up in the top left-hand corner, my unrealized investment gains are separated into the Canadian and the US currency. But in total, it ends up being just over 3,000 Canadian. And so I should mention that I just started investing about a year and a half ago, so these gains are fairly significant for the value of my account. Now you'll also notice that I do have a cash position in this account, which makes up about 4,100 Canadian. And so I always want to keep at least $3,000 in my account, since it takes about 2 days to transfer over the funds from my savings account to my investment account. And I always want to have that liquidity available to be able to take advantage of deals in the market whenever they come up. Alright, so if we just jump into the account here, you can see that about 79% of my money is invested in individual stocks, 12% is in cash, and then the remaining 9% is in exchange traded funds or ETFs. And here you can also see my total cash position, my market value, and the equity value, both in the Canadian side and the US currencies, since I both own stocks on the Toronto Stock Exchange here in Canada, along with some of the US exchanges too. So now I'll go through all of my individual stock and ETF positions in my portfolio, so be sure to stick around until the end because there are 10 positions. Alright, so coming in with number 1, we have the Bank of Nova Scotia stock, ticker symbol BNS.TO, and this stock is part of the elite group of the top 5 banks here in Canada. Now I bought into this position multiple times in smaller amounts to be able to reduce my cost basis down, and that led me to a total of 65 shares at an average cost basis of $69.84 per share, which built up to a total position of 4,539 Canadian dollars. Now this stock is one of my greatest successes to date because I only started buying into this stock in about May of 2019, and now I'm up over 9% and 429 Canadian dollars, making my position now worth nearly 5,000 Canadian dollars. And the reason why I decided to start buying into this stock in the first place is because I found that it was extremely undervalued. Taking a value investing approach, I looked at the earnings per share and I saw that they were increasing over time. Meanwhile, the stock was being punished for about 2 years with its stock price plummeting. So I ended up buying into the stock in $1,500 increments as the stock was falling to be able to reduce my cost basis each time. And ever since their last earnings report being super good, everyone started buying into the stock because they realized that it was super undervalued. Now, the other thing you need to know about Canadian bank stocks is that they have an excellent dividend track record. And so Bank of Nova Scotia is no exception, and they have an extremely high yield. With Bank of Nova Scotia stock, I managed to lock in a dividend yield above 5% because I bought it at such a low price. And now I'm going to be making $234 of passive income each year. So overall, I really love this stock both for the dividends and the capital gains, so I'm not going to be selling it anytime soon. Alright, jumping into the second stock in my portfolio, and that is the Canadian National Railway with ticker symbol CNR.TO, and this is the top railroad company here in Canada. Now I've always really liked CNR, but I never found a good opportunity to buy in until a few months ago when there was perceived weakness in the manufacturing industry, and so their stock plummeted all the way down to $112 per share. However, I took this as a buying opportunity to build up a position of 15 shares at an average cost of $112.83 per share, leading to a total cost basis of $1,692.50 Canadian. And this one has already been an incredible winner for me in only a matter of a few weeks because I bought in early October of 2019. As you can see, I'm already up over 10% on my position, posting unrealized gains of $183 Canadian. So now I own $1,875.90 worth of CNR in my portfolio. But to be completely honest with you guys, even being up 10% in a matter of a month doesn't mean that I have any intentions to sell. In fact, I'm probably never going to sell this stock because they have such a big moat. This just means that any competitors trying to enter the industry are going to have a very hard time because it would require an enormous amount of capital to build all of the railway tracks that CNR already has across North America. Furthermore, the company pays a dividend of 53 cents per share, which equates to an annual dividend payout of $32 for me, and I know that's not much, but it definitely has room to grow since they do only have a payout ratio of 33%. So overall, I'm super bullish on this company, and I really hope the stock price drops down below my cost to be able to build up this position into a $5,000 to $10,000 position in my portfolio in the near future. All right, now the third stock in my portfolio is a very popular one that most of you guys are gonna know, and that is Facebook with ticker symbol FB. I bought into Facebook when the stock crashed over 20% in a single day because the company mentioned in their earnings report that they wanted to focus more on the privacy and data security concerns, which would involve increased capital expenditures over the short term. And as we all know, Facebook continued to crash all the way down to $125 per share, but then found a rebound all the way back to $190 per share where it is today. Unfortunately, I only managed to get in at around $180 per share with 8 shares, leading to a total position cost of $1,439, and now that's worth $1,526.72. So I am up on the position by about 6%, but I wouldn't rule out the possibility of building up my position even further at these levels because I do see so much potential in Facebook. Facebook has so much growth ahead of it, and as we continually see from their earnings reports, they still keep managing to beat revenue and earnings estimates by growing engagement on the Facebook platform, not to mention Instagram, WhatsApp, and Messenger, which are all becoming monetized. So personally, I'm super bullish on Facebook stock despite them not paying a dividend, and would love to buy more in the future. All right, now the fourth stock on this list is a very popular one too, and a long-time dividend payer, and that is Johnson & Johnson Corporation, ticker symbol J&J. For those of you who are unfamiliar, Johnson & Johnson is the world's largest player in manufacturing and selling consumer health products, medical devices, and pharmaceutical products, and the company has been around for an insane 130 years. However, this stock has been experiencing a lot of struggles recently through their lawsuits regarding talc and baby powder for contributing to the opioid crisis and numerous other claims, but I personally only saw this as a short-term struggle and then a great buying opportunity. So I recently managed to build up a small portfolio of 10 shares at an average cost per share of $129, leading to a total position cost of $1,289 US. So at the time of making this video, I'm currently only up about 3%, but I do expect this to rise significantly over the next few years because the company is expected to keep growing their earnings at a healthy rate, along with the dividend that they've been paying ever since 1972. Overall, I think this is a solid company that does deserve a higher valuation to it, and I think it'll hold up very well in the upcoming recession. Jumping into stock number 5, it's a brand new one that I've never talked about before on my channel, and that is McDonald's Corporation, ticker symbol McD. Now, a common misconception about McDonald's is that they're a burger company alone, but that couldn't be further from the truth because McDonald's is actually a real estate company. If you just think about all of the McDonald's restaurant chains in such prime locations across the world, you'd be foolish to think that their property values won't increase over time. Now, recently, McDonald's stock price actually took a dip because of a poor earnings report, along with the CEO actually being fired because of a personal relationship, and I actually thought that was pretty hilarious. So on the news, I managed to build up a position of 8 shares at an average cost basis just under $190 per share, leading to a total position cost of $1,519 US. At this point, I really haven't made any significant gains because the share price has only increased to about $193 per share, but based on historical performance, it seems to hold support pretty well after a 15% drop, so we'll see where it goes. Now, you also need to realize that McDonald's is actually a huge dividend payer, just like many of the other stocks in my portfolio, and they've been paying and increasing their dividends every single year since 1976. So overall, I'm very happy with this position, and I would definitely consider buying more at levels below $190 per share in the near future. Alright guys, we're finally at the halfway point here with stock number 6, and this is one of my favorites that I revealed to you a few weeks ago, and that is Microsoft Corporation, ticker symbol MSFT. So if you did watch that video, you'll probably have an idea of why I bought that stock in the first place. However, let me reiterate my cost basis and what it's actually worth now because things have changed. Back in June of 2018, I bought 15 shares of Microsoft at an average cost of $106.62 per share, leading to a total position cost of roughly $1,600 US. Now, if you've been keeping track of Microsoft at all, you'd probably know that they're doing pretty well, and their share price is actually appreciated all the way to $145.96 per share, making me a return on investment of just under 37%. This translates to a total return of $590, or for you Canadians out there just like myself, a gain of 780 Canadian dollars, and this is the most I've ever made on a single stock. So obviously I plan on holding this one for the long term to increase my returns even further, because I see a huge amount of potential in the technology industry as well as the cloud computing industry, both of which Microsoft is the leader. Now moving on to my absolute largest position in the entire portfolio, and that is the Royal Bank of Canada, ticker symbol RY.TO. The Royal Bank of Canada is actually the largest in Canada, if you didn't guess from the name alone, and it has a market cap of over 150 billion. So based on my criteria of blue chip stocks, this is a perfect bank stock for me to choose, and I think it's very safe over the long term. So I started buying into the stock back around the same time when I started buying into Microsoft stock in June of 2018. And as the stock price kept declining, I was able to build up a position of 50 shares at an average cost of $98.74 Canadian per share, leading to a total investment cost basis of $4,936. And since then, the shares have appreciated to a whopping $108 per share, making my total position value now being worth over 5,400 Canadian dollars. So I've made about a 10% return in just about a year's time, not to mention all of the dividends that RBC continues to pay me on a quarterly basis. And with regards to the dividends, I managed to lock in a dividend yield above 4% because I bought the stock so low, and this currently translates to me getting $210 of passive income every single year just for holding the shares of this bank stock. And it should be noted that these dividend payments will increase over time as they've been doing for many years consecutively, so this will likely increase my passive income that I receive every single year. So overall, I really love this company as an investment because it's the top bank in Canada, as well as being an excellent dividend payer, but I'm really not sure if I should sell the shares right now and profit 500 bucks, then wait for the share price to drop down and buy back in. So definitely let me know in the comments if you think I should do that. Alright guys, so the 8th stock in my portfolio is Suncor Energy, ticker symbol SU.TO, and this is the largest integrated oil and gas company here in Canada. Suncor is actually one of Warren Buffett's most recent holdings because they have been dropping a lot, yet the company has been rewarding shareholders through share repurchases, capital gains, and dividends for so many consecutive years. A few months ago, I bought 40 shares at an average cost slightly below $39 per share when the company reported bad earnings, and it came to a total cost of $1,560 Canadian. Now keep in mind guys, the stock was trading at a price upwards of $54 per share in the middle of 2018, so literally a year later and I'm getting it at $39 per share is an excellent discount. But recently the stock has been on an absolute tear ever since their last earnings report, and so now I'm up 9% on my position, and my position value is now worth 1,703 Canadian dollars. But again, even with these short-term gains, I don't plan on selling the stock because I think oil and gas is still in a rut here in Alberta, Canada, and there's only room to go up. And even if the stock does fall below my cost basis of $39 per share, I'll just scoop up more shares because I'm getting a dividend yield of over 4% at those levels. Overall, I can't say enough great things about Suncor, and I think they'll continue to do very well over the long term as they've done in the past. Now moving on to the second last position in my portfolio, and that is Visa stock, ticker symbol V. I'm sure all of you guys have heard of Visa company before, and what they do is they perform all of those transactions within the Visa credit card machines across the globe while taking a small 1 to 3% cut on each transaction value. And you can only imagine for all of the transactions that happen in the world, how profitable this company can be. Along with this, I bought into the stock because I really don't see the company going away anytime soon, despite what people are saying about cryptocurrency taking over the world. So back in 2018, I started a position of 15 shares at an average cost of $145 per share, leading to a total position cost basis of $2,100 US. Now, ever since, the company has been doing extremely well, having their share price rising all the way to $179 today, which gives my position a current market value of $2,684 US, and that's a gain of 23%. I'm really happy with my position in Visa stock and I love the company, but I really wish I would have taken advantage of the drop in December of 2018 when the stock price crashed all the way down to $122 per share. But unfortunately, it is what it is, right? But if I do get the chance to keep buying below my cost basis in the future, I definitely will, because I don't see this industry going away anytime soon, especially with the growing need for e-commerce, along with developing nations using credit cards. All right, finally, we're at my last position, and interestingly, this one is an exchange traded fund, the only ETF that I own, and that is ticker symbol XUS.TO. I also spoke about this ETF in an earlier video, but if you haven't seen that video, it's essentially just an ETF that tracks the S&P 500, but it's in Canadian dollars. And this allows me to dollar cost average my way into the ETF and then build up my portfolio to keep up with market returns. So up to this point, I've dollar cost averaged my position into this ETF to a fairly significant one, being 60 shares at an average cost of $49.24 per share, and that was a total cost of 2,954 Canadian dollars. Now I'm actually up on this position too, since the market has been doing very well recently in the past few months, and that has posted a return of 3.7% and a gain of over 100 Canadian dollars. Overall, there's not too much to say about this one. I'll continue dollar cost averaging into this ETF to gain exposure to the top 500 companies in the United States, and that's just a way to diversify my portfolio. And really, I'm probably never going to sell this position because the S&P 500 always does well over the long term. And that's it, guys. If you did stick around until this point, do let me know in the comments below what you thought about my positions in my portfolio. And if you do own any of these too, I'd be very interested to hear. Also, if you do like any of these companies as potential investments, make sure to perform your own research because I don't want to be held liable if you lose all of your money. I just want to make it clear that I am not qualified to offer any investment advice, so do make sure to do your own research. So with that said, thank you guys so much for watching the video today. I really appreciate it. If you did enjoy or gained any value from this video whatsoever, just be sure to smash that like button for me. It really helps out my channel. Also, if you haven't already, be sure to subscribe down below for more content on personal finance, business, and investing in the near future. And I'll see you guys next time.